Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 10th of July, 2018, getting on to the 2:30 time frame right now. That's p.m. Central Daylight Time. Well, most of the metals were down today. You can see the red line right there. Copper market tried to get up a little bit, just missed it in terms of being able to hold on, and from there fell as much as nearly 7 cents. It's a heck of a break that's been going on in that market, and as I've said, it's probably the largest break in any one commodity going on at this hour. The stock market's interesting in that the NASDAQ and the Russell are trying to stay stable, maybe weaken a little, as you've got the strength rotation into the S&P and the Dow. Now remember, earnings season began today, so that will impact those markets right on through the next couple of weeks as they come out. I think all the banks come out on Friday. We had Pepsi today, a couple other companies, so you'll see what's going on through there, and you've got to be aware of that. The dollar index, very stable, but fireworks are going to begin. The president's on his plane heading to the NATO meeting in Brussels right now. He'll meet tomorrow and Thursday, and then he moves on to the countryside in Scotland and the UK, and then he moves on to Helsinki to meet with President Putin. So he's gone for a bit here, but you know the one thing that's going to happen, there's going to be a lot of words. There's going to be the typical Trump talk. They're not paying their fair share. They overcharge us with the tariffs and so on. Get ready for it. That's what I can say. The nominee for the Supreme Court, come and gone. Now he'll have to fight his battle, if you will, to make sure he can get enough senators in his corner to go through with the nomination process and get approved. So where are we? Well, if you look at gold, you're down roughly 100 ounces from the recent top, and I call that the recent top, 1350, 320, to the most recent low, and we haven't bounced away from that low of 1250, 450. If you call being up $1 for the week a bounce, okay, I would say that you haven't gone anywhere. When you take a look at this chart, you start seeing that picture. Now, this picture can change if the market can get over yesterday's high. Some would then be able to argue, well, maybe the market's made a low in this area. On the other hand, if you take out the low that you made right through here near that 1236 level, watch out below. What kind of pattern do we have on the swing line? Nothing. There's no help here at all. You've got a pattern of a higher high and with today's break a lower and low. So if you took this off the chart, you looked a lot better yesterday. You had a low with a higher low and higher highs. And the thing that has been plugging gold is it can't to the upside put anything together to get it strong. That's been the problem it's faced a good part of the year. When we look at the 18-day average of closes, you can see that yesterday's rally carried you right by that, and you backed off again. I would assume if the market tries to rally again, that could offer another level of resistance into the 1265 level. The Bollinger Bands during all this one's coming down, this one's rounding out and trying to come up a little bit, trying to create more sideways action than anything. When we look at slow stochastics, which lead momentum, in other words, momentum leads price most of the time, that is up. So I would not be surprised if you just play around from here trying to get back to that 18-day average. Would not surprise me at all. When we come to the GLD ETF, if we take a look at today's low, it's 118.61. You see this right here? That took out 118.73. So just like the futures, you're no longer in a trend. You now have a higher high and a lower low. The bias is down both in the futures and GLD because you're under the 18-day average. And again, momentum is trying to lead price. And if it can, maybe it can get back to the 18-day average to restructure. Nothing on these charts as I see them can turn them bullish or bearish in terms of swing lines. In the GDX ETF, well, you still have the pattern of higher lows, higher highs. The upper Bollinger Band, this black dashed line, did its job. Remember the theory. Bollinger Bands are an algorithm that is designed to keep the market trading within it 95% of the time. So when you get a thrust in the market up or down, often, and the word is not always, often, the first challenge of it is where professional traders might decide to take money off the market, assuming that they're riding the market down, spot to take it off. Bollinger Bands are not meant to be, gee, I'm going to buy the band here to get long to come back up. That is not the way that I teach it. I don't know anyone that does. You might have your own theory, and that's great. That's what trading's about. Support back here at this combination of the 18 and the 100-day average of closes, which just keep sitting on top of each other back and forth. But 222.23, get this number down, and it will probably happen about a slow stochastic under a 70 reading, and I'd expect to see some buying in that. When we look at the gold-silver ratio, notice how it's starting to roll over a little bit. Now, it's not enough for me to say it's done anything of importance, but 77.97 seems to be where the market, if it wants to drift lower, might be headed to. If you look at silver, it's in a battle here to figure out what to do. While the momentum is turned up, you have a higher high, and with today's break, a lower low. Today's action really hurt the metals. By taking out the lows that we had in place, you've now destroyed the opportunity to create a pattern that could be an uptrend defined as higher highs, higher lows. All the while, you've stayed underneath these markets, the 18-day average of closes, which keeps the bias down. In the copper market, we have an outside day down, which means you took out Mondays, high, low, and closed lower on the day. Until today's high is taken out, or if it's taken out on Wednesday or Thursday, I'd call that a bear trap. Why? If you take out the high of an outside day down, my rule, my own, within 2 trading sessions, often it leads to a challenge of the closest moving average or a Bollinger Band. In this case, it would be the moving average should be breaking out to the upside. I'm not saying it would happen, I'm just saying that's my theory. Momentum-wise, you're still locked into a bear situation. In the Oct Platinum, look at the low of 840. That did not take out 838.90, so it's a stronger looking chart than the other metals in the sense that it's got the higher lows, higher highs. Momentum picked up a while ago when you lost the embedded reading, and in theory, I thought you would go to the 18-day average of closes because that's often what happens. You've made a run at it, but it's not over. I'm still looking for that possibility in this chart, but let me explain the problem. As long as you stay under that 864.30, you still have a downside bias. You got to get over it and prove you can hold it. In the palladium market yesterday, you got up to the 18-day average. You notice how snap bang, the market pulled right back. If it can get up and over the highs of yesterday, Monday, then you've got the 100-day average. Get under 932, which you did today. Look at the low, and you destroyed the whole pattern. Now you got a higher high and actually a lower low. So the bull pattern was destroyed today, as it was in so many of the metal markets. In the dollar index, you've gone from literally trying to hit the upper Bollinger Band to hitting the lower band and getting a little bit of a bounce. What more can you say? The trend is down. You've got lower highs, lower lows, but you are oversold. You know, one of the things we love to do here is we write. We write a lot. And for those of you that have tried our research, you see that it's commodity research written for commodity traders, be it an option, be it a derivative play, cash market trades, hedging ideas, it's all there. So if you're in this market looking at the metals and want an idea of what's going on, maybe it's time you look to see what commodity firms write. And this is what our reports do look like, by the way. And the categories, you don't have to choose all these. You choose the ones that you want. You might be a metals trader and just want to get the currencies. Maybe you'd say, all right, maybe the financials because interest rates might be important to it. And, of course, I want the metals. You're done. You don't take the rest. There's no charge for it. You can try this out. How? Give us a call, 866-973-2077. You can visit our website at www.iraepstein.com, and you can always click up here. If you see this icon, it'll take you right to that page where you fill out the forms and choose what you want from not only this, but all our other products. I'm Ira Epstein. You have a good day.